Okay, good morning traders. Welcome to the Bookmap All Markets webinar. We will go through the order flow in any market that you guys choose. Typically it is the futures CME US market and in particular the ES, the S&P 500 E-mini that we go through, and we want to understand the order flow at a very high level or deep level, I should say. And this can be applied to any trading strategy. There is an edge in order flow, and that's what we're going to go over. All right, so let's jump in. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Substantial risk. All right, so welcome everybody, and let's jump in here and take a look at the markets. I do have a trade to go over. We go over these very simple examples in here, and I'll go through it in detail though, and this can be used on any time frame. In fact, before we well, let's get into the current market, and we'll go over this next, and then we'll I also want to look at the higher time frame. Perhaps actually we'll go over the higher time frame next. Anyway, yeah, we can see the current order flow, or the price action right now move to the downside. Then we see the cash open, and we have a nice move to the upside into high liquidity here. It stretches a bit higher and comes up into the swings up here, and that's about it. Couldn't get up into this high liquidity up here around 54.5 and 55. And we've been just going back and forth in here. Now we had some data here. You can see the liquidity pulled, and sellers come in pretty hard, slam it. Guys, you just can't make this stuff up. This is where we're getting reaction. Here's the cash open, and here is the price action, the move to the upside, and we get a bounce here. Okay, now we would anticipate a bounce there, and now we're getting seeing a lower high in here, seeing some sellers in here. Okay, so let's see now if the sellers can reach this low again and maybe even break it and head down into lower liquidity, down maybe around 42. Right, so that would be the current read in here, just looking for that to unfold. We do have some on the offer here. Look at this. Okay, we do have some on the bid though too, so there's a bit of a fight going on here. It's not a clean and clear setup here, right? So what would make it clean and clear would be this liquidity in here, even lower, maybe down by this swing here. See how it's dark in here? They're not adding liquidity at a lower level. I mean, they did here, but they're adding liquidity at a higher level here, and so we get this back and forth action in here. This is how we can use the order book to our advantage, right? So when we have alignment, that's when we have this high liquidity here, maybe even a lower level, maybe down here, and you won't see them adding in here. They'll just remain down here. They may even pull some down here on the bid, and we're just looking for our aggressors to pull it right through, right? Or at least test it. Very simple understanding using order flow, price structure, and volume. Okay, the transactions. Where are the transactions taking place within the price structure? Right, so we would have avoided it because we didn't have all the pieces here, right? Okay, so good morning, Stephen and Alois over in YouTube. All right, let's go over a trade example, and then I want to go over yesterday's action as well. So let's just jump right in here from this morning, and we're going over setups that you guys are aware of. We're only really covering one. We will have more in the very near future. The setup is a momentum strategy. Okay, just very simple, clean and clear momentum strategy. You can find it here On bookmap.com, go to the education button right here on the toolbar. That'll take you to the Learning Center. There's a getting started course on how to use Bookmap, understand the features in Bookmap. There's a market mechanics course that goes over understanding how these markets operate at a very detailed level, understanding the market mechanics. And then we have strategies and setups. If you click on this and you go here, you'll see that there's a handful of videos here, but they go through just one continuation pattern or momentum strategy, and that's a flag pattern, which is a very, very simple pattern. It's just strong impulse move, a mild pullback, followed by another strong impulse move. All right, and we have it in diagram form, what it looks like in Bookmap, and then also the what we're looking for to make this setup much higher probability. All right, and we're going to cover this as well about looking at something higher probability. All right, so let's take a quick look here and we'll go through it, and let me know if you guys have any questions. All right, so just a minute. Good morning, Slowdown, Caesar, Vinny. Great stuff, you guys. You know, all of you, like Rob, Steven also, like, just making tremendous progress in here with your documentation in the Bookmap Academy. All right, so this should help. That's why we're here. And we're going to go over more and more of this. We're going to be active with the trading in here and understand how it works, how we can apply our market mechanics from this course. Where was it? Yeah, here. Okay. This strategies here, or this strategy here, and also the market mechanics, understanding how these markets work in order flow, and put the two together here. We're going to put it together with trade management, though, and that's what we're going to go over right now, and then a lot more in the near future. So actively trading in here, and what we're looking at. Let me show the orders here, okay? And it looks a little messy here, but it's pretty straightforward. There's just a couple of trades in here, and let me go through what I saw. All right, so here's the cash open, okay? 9:30 a.m. East Coast time, and we have, well, what do we have in front of us over here that helps us understand that this is worth taking for an opportunity? Okay, now what we have now, I got in here actually, you know, pretty late. I saw this, kind of caught my eye, and a little late, to be honest. But let me go through it. What we do have down here is we have our consolidation range. We have our impulse move here. Now it's not very strong though, and it's only come up to where these sellers are here. So this is not really the breakout kind of, this is a consolidation, and this is a breakout here of this consolidation, but we're still within the selling area here. We do get the pullback, we do get the bounce off of this top of the range here, and we get a stronger move here at 9:30. All right, now this was a morning you know, cash open momentum play. That's a little different, and with all of this kind of stuff behind us, setting the foundation for this trade is it's just not it's a little different here in the sense that it is the cash open and the first move here, okay, the momentum move in the open, and that's what the play is here. Okay, now we do have this consolidation down here. It's not really that great, but you know, moving up to the top of the range in here, or this liquidity in here, is what we're looking for, right? Because we do have momentum in the cash open, so we're going to ride it. And this is what I saw. So here's the momentum here. Now it's not the greatest. You know, we've seen a heck of a lot more at some of the cash opens. Then we kind of chop around in here, and then we do get the breakout here, but this was my decision making. We'll just go through it. Okay, so I saw the move up, and then let's just zoom in here, okay, because I did trade on this low time frame in here. And then I saw high liquidity traded here. There's still more buying pressure. I saw a retest here on the sell side. It didn't make a lower low here, and there's not a whole lot of volume here. Okay, we had a little bit more volume here on the sell side, but we see more buyers back up in here. I'm in. All right, now this is a horrible area to get in, but it's a very simple idea. I'm just looking for the momentum up and try to get a measured move out of it. Okay, this would be the measurement here, and I just duplicated that, and then I placed it over here. Now we'll go over that in just a minute, but like at this point here, okay, I'm getting it at the top of the range. Now through trading this many times, the momentum move in here at the cash open typically continues, right? So therefore I was willing to take the risk here, but I was not willing to put on a full position here. So I scaled into this, right? So, and then I'll ask you guys, where do you think I would scale? Where would I be interested in scaling? Good morning, Trout and McLoco. Liquidity area. Yeah, that's a good one. Good morning, Herman, Caesar, over on YouTube. 50.49, 49.50. I'm not really sure, McLoco. So anyway, this is typically on a stronger move. Now, this wasn't, like I said, this is not the strongest move that we see at an open, but typically the first pullback we get is going to be a spike kind of below and retest this little range in here. That would be the first test. Maybe this 48.50 here, maybe. Okay. Now you can actually see what I did. I put it in here, and then I actually moved it down a tick, just in front of that higher liquidity here. Right. So I'm scaling in here now. If I grab this and I get a profit out of it, I missed my scale. I didn't have a full position on, and I have to live with that. And that's fine. All right. Because I just don't, this wasn't 100%, like it didn't have all the pieces in here. There's a lot of pieces missing in this here. This is not the flag pattern, the typical flag pattern that we were talking about over here from the Learning Center. We'll go through the checklist in here, but the flag pattern has higher liquidity up at this higher level. It has a lot of different elements in here that we don't have, and the reason being is that this is a momentum drive at the open, right? And I'm just going to ride that. I'm willing to take half a position here, or maybe a third of a position, and another third of a position here. All right. Now I actually put in one more third down here, right at this little kind of nook in here that we see again and again. This is the first pullback. We may get a bigger one. Okay, but I'm still going with this strength here. All right. So I got on the second leg here, and then I had my targets as well. Okay. Now my brackets, basically, here I'll just show you what I do with my brackets. My brackets, I have it at 20 take profit and 10 at stop loss for the S&P E-mini, and then they're far enough away, then I'll just move them manually. All right, and then that's it. So yeah, in fact, so I had the take profits up here, and my stop loss here and here. And since Now, since I am willing to scale into this trade, I put my stop losses down here, kind of out of the way, and I will judge it later. Okay, I'm not going to take a full stop. I'm just going to judge it later. Right? This gives me some breathing room. I will not let it go against me though, but I just don't want it to see it come down and hit me and then go off in the other direction. If it hits, gets a pullback, and then I see more selling again, I will just hit the exit button or the flatten button. All right. But my second scale was at this little area in here, and that was the play. Okay, that was the way I played this momentum move in here. And what was the outcome? The outcome was you can see this is the break-even indicator, break-even point, and you can also you can get that here, guys. It's break-even point. Just add it in your from your configure add-ons here. All right, you should see it in there with Global Plus. All right, so now I have my second leg on, and then I still stayed in the market here, thinking maybe I get the move down there, and then the move back up and test this high liquidity. This is all I got out of it. Okay, it went a little bit lower here, and then it kind of just chopped around, and then finally, I decided to move my stop, or I'm sorry, my take profit in front of this high liquidity at the top of the range here. Okay, and exit half the position. All right, so I'm not getting too much out of this, but I'm controlling the risk. Right now, we got the move here, and it did test this high liquidity, and then it started to go further. Right now, you can see with the point break-even point here, as soon as I'm filled in here, because I have two positions on in two different places, it has averaged my position. My break-even point is here. As soon as I'm out one position, it drops it. All right, so now I can manage my stop, and I move it up at that point, and this is my overall break-even +1. And I stayed in the market here. It just went back and forth, and then stopped me. I moved it up. In fact, and the reason that I moved it up, I actually kind of moved my my stop down here as well. I'm sorry, my take profit down. Here's why. I have my measured move now. Okay, so this is my measurement, and then this is the same line here, and then I'm looking for the take profit up around here. Therefore, it's like, oh, okay, well, I better get in front of it a little bit. So I'll move it down a few ticks. 3 ticks down to this level here at 52, 50, 53. All right, and then at that point too, I decided I'll move my stop loss up, and then I got stopped out here. I was holding it and waiting, and you can also see the reason that I moved this up here was because I have a range here and I have a range here. All right, and if it starts to hit into this the bottom of this range, and I'm getting sellers in here, it'll come back down all the way to my break even and stop me out for just break even overall on the entire trade. Right, so I just gained a little bit out of this trade. I didn't get much out of it, but I controlled the risk. I had my reasons for the setup, and then it really wasn't giving us much here. Okay, so this move should have worked, and it should work immediately. If it doesn't, I'm managing it, and that was my decision-making process here. All right, so guys, it's up to you how you want to do it, but like, I'm looking for my setup. I'm leaning on these things in here. It's a momentum move at the open, and it's really not getting too much momentum here. Right, and in fact, I could have managed it more aggressively up in here, and it's kind of a lower high, and that maybe I start to see some selling in here. I get out and save a point, but I decided just to keep it in here and let it roll, and I'm still looking for that momentum. And you can see that it can just go below the swing here and then pop. And it kind of did here, but here is where I got the stop out. All right, and then I'm out of the trade. Now, let's go over, like, this momentum move is basically failing. And what this turns into is kind of a grinding move higher. Now, there's reasons for this as well. There's higher time frame stuff here. So for example, here's our 15-minute chart, okay, our hourly and our daily. On the 15-minute chart here, we filled the gap and we kind of went above it here, and that was it, right? So there was a gap fill, and it's kind of struggling. Price is struggling to get back up into these higher levels here, right? So it turns into a grinding move. And we get kind of this move upwards, but it's just really back and forth. All right, now we covered this the other day. So the momentum move is done, and this kind of grinding move now, and the structure that it creates. I want to cover this because we started to talk about it last week, and the way we can kind of read this in the order flow and really get something out of this is we still see more buyers in here. Okay, we're getting less sellers, but the pullbacks are pretty harsh. They're coming back, you know, in this, it's a small move or a small range. However, they're coming back pretty far into that range each time. So we're not really looking for much out of this. In fact, looking for a big momentum move up in here is probably a good idea to avoid it. Now, it may unfold, it may happen, but because there's this back and forth in here, instead of like getting in up here and having this heat and having it go against you, you can look for and you can anticipate the pullback move here. Okay, and then there's ways to manage this one as well as a strategy. Okay, because you're not getting that full move here, or this big move in here. So look for the pullbacks. You can get in some of these areas in here when you see the buyers start to come back in. You may consider managing some at the top of the range, or just looking for it to go a little bit higher. Okay, so like for example, it went about a point higher or so here. Okay, and again, this is a small time frame, but the concept is the same on all time frames. We can look at a monthly chart and I can show you this. So if that is the case, then maybe you're looking for the move up to this liquidity here, and that makes good sense. 54.50, okay, large player up there. And then if you got in here, maybe you're holding it, looking for that move up to about here, right? Because it's grinding, and you're probably not going to get a full move or big move out of it, right? So anyway, what unfolded here is it kind of grinded higher, and then we had some data here at 10 o'clock that wipes everything out. Okay, so this was what was it? It was consumer confidence and also jobs jolt jobs opening. So anyway, yeah, that's the way that this played out and was managed. You guys, let me know if you have any questions, but you know, reducing the risk. Also, you'd want to get out before the data here as well. It's very important to keep your eye on the data. You don't want to get caught up in this, right? So this can really be devastating. You can really get slipped. All right. Let's see here. Any questions? Uh, 52, yeah, in terms of the pop. Yep, that's what.
Hey Bruce, I just wanted to show you a few things that I thought in instant replay mode, if they could be added, would help streamline. I have an example up on the screen here. This was about.
Okay, JYF. Yeah, you got your video. It was just playing there by accident. So Do I scale out with my stops? No, well, those would be a limit order, take profit. Okay. Trout, one thing, this can be really, it can be kind of nerve-wracking with your limit orders when you're looking for maybe either a pullback or your take profit. A lot of times it will hit your level and you will not get filled, okay, because you're at the end of the queue. And when you're at the end of the queue, basically what it means is it has to trade through you in order to get filled. So if that's the case, then consider the front running by a ticker or two, and then this way you can you'll have much higher probability of getting filled. All right. Yeah, I mean, how many times has that happened to all of us? You have a beautiful take profit, it comes up to it, you even get a big volume dot up there, and it doesn't get filled. And it can be really maddening. And then it goes and then it goes away, and like maybe even add to the position, and you've turned a great trade into a loser. Oh boy, that's one thing you don't want to do. Anyway, guys, what has happened since all of this? Not much. Yeah, we kind of left off here. We're looking for the move lower to low of day for the cash session. We didn't even get that. This liquidity came in down here. We covered this earlier. We get the move back up into these levels here, but the data here is the move that's still in control, right? We don't see a move back up to where it initiated here. So we've got data, we've got a gap fill, and guys, we have a huge week ahead of us here. Is just getting started. FOMC, non-farm, lots of earnings, and other data releases as well. Okay, so we're going to have a pretty volatile week, I think. All right, now what we just covered, though, in terms of momentum, can be used for even those events. Right, so consider that. Once you get good at momentum, there's a lot of tools here, or it's a fantastic strategy because you don't really have to sit around and wait. It usually works pretty quickly, and then you're either wrong or you're right. Here the knee-jerk reaction was to the downside. Now data releases, you have to be kind of careful, but this is very similar to the open. Okay, just a lot less liquidity, that's for sure. And look at the move down to high liquidity, a little bit through it, and then look at the pullbacks in here. Okay, this is why you can manage your scale in specific ways. See this little ledge or this area here. Okay, we can go across. That's where the pullback came to. Okay, now it makes total sense. This is where it broke down from. You can even look for a little point of control in here. Maybe it will come up to that right here, this level, 49.51 and a quarter. Okay. It didn't. It just came up to the top of the level here, or bottom of the level over here, and then went back down. So you can look for these. Okay, here's one little more test up here. Again, there's all sorts of ways to look at this and manage this as well to reduce your risk, and also to add in to scale in and get a lot more out of your trade as well. Okay, so let's suppose that you got in someplace in here. Okay, well, now this is a really small move, but this is where the buyers came in and on the pullback. Okay, well, this is where it kind of bounced off of here, kind of bounced again, one more kind of tap up here, and then actually another tap up here as well. But now you're kind of in this smaller range in here. If you got in like someplace in here, you can look for reducing some risk down here, and then look for the continuation. All right, now again, it's not much of a of a move in here, and typically it's a lot bigger for data releases. This wasn't the most important data release, anyway, and we got a nice move out of it actually initially, and it's up to you. Like if that is the case and you're looking for your pullback and maybe you get in any of these areas in here, and you're looking for a bigger move, well, your stop would be up here someplace, right? Your take profit would be down here someplace. Okay, and that would have worked out nicely for you. So we're talking about much, much bigger moves there. Concepts are the same though. Okay, that's your pullback. You're getting a shallow pullback because of this impulse move. Okay, we know where that's going to come to typically, and then we're managing our trade from there and reducing risk and maximizing our profits. Right, so we finally have come down and spiked just below the cash open now. That was what we were looking for over here. We had to do all this back and forth in here, and then finally got the move down. Okay, and we're just kind of right in the middle here. All right, so if you were trading a higher time frame, same ideas. In fact, let's put our line across here, horizontal line. Okay. And yeah, you can see a few more spikes up into here, not sustained by the buyers, and sellers drive it back down into these swings again. Not enough buyers, not enough buyers, not enough buyers. Selling clusters starting to look pretty good. We would look for kind of a test back down into these lower levels here at this point. These are looking pretty good, and there's just not enough buyers in here. I would be looking somewhere around in here for the break with a stop up here, okay, with some take profit there. And then now we are seeing buyers, right? Now we're starting to see like a bit of a change here. Okay, this will actually segue really nicely into what I want to go over next. Okay, because this might be it, maybe. Now we're starting to see a bit of a change. You can see it. You can see it here in the in the volume. Okay, also the price structure. Right in here. Okay, we mostly selling. Look across. Look across here. Okay, mostly selling. Right, and then now we're starting to see buyers. Okay, more buyers, more buyers. Right, so we're looking for maybe a lack of selling now, higher liquidity. We got higher liquidity here. Okay, we have a lack of selling here. All right, so let's see if we see some buyers come in right now. Okay, we're starting to. All right, so I'm looking for the buyers to come back up to this liquidity here. Okay, at this 49.50. Okay, and then let's see if we can get more buyers up in here to break out into 49.51. Right, so see the order flow shift. Okay, and then we can talk again about trade management in here on this very small move. Okay, you probably would have, maybe you'd still be in it. You'd front run it by a tick, right? And you might have gotten filled in here at that point. Okay, yeah, you would have gotten filled there now on your first leg. Okay, but you're holding the rest. You can have your stop still down here, and you're looking for 51 now, right? All right, let me know if this makes sense to you guys. I know it's small time frames, but again, these concepts work on much higher time frames. On your much higher time frame, if this is the reversal that you are looking for, and maybe it is, you got to take the risk. Okay, so how do you get in? Well, you'd probably be getting in somewhere around in here. Maybe you'd take some off back up at the top of the range in here, or highs of the day. Okay, yeah, thanks, McLoco. making good sense. Vinny McLoco, yeah, great to hear. Let me know if you have any questions, right? Because we can go over a little bit more in here, a little more detail in terms of trade management still. And look at how we're kind of grinding again here, right? So maybe you take your profit up in here, maybe, right? Unless you see really big green dots up in here, maybe you're reducing the risk up in here. It makes sense, okay? Because we're looking at these moves in here, and where maybe this is a little too high up in here, and there's going to be other traders up in here they're going to start to sell it back into the mean, right? Just like this, right? So this is something to put in your quiver here, and consider about your trade management. Okay? Now there's a reason for it being this being too high. I hate to say too high or too low. This is not the point. The point is to have a reason for it. Okay, and the reason is right in front of us. Look at these moves. Okay, this is what we have on the buy side so far. Here's what we have on the sell side. Okay, and we can take these moves and we can start to move them around. So therefore, taking some off up here is probably a good idea. All right, instead of waiting for this high liquidity up here at 51. All right, so little details like this, although you might miss a big move, but you're building confidence. There's reasons for it. You're managing your trade, you're reducing your risk, and you're building your confidence. Okay, and you can still position yourself for the next trade, and you can even, when you start to see something really good, you can start to scale in. All right. Morning, everybody. Guys, if you like this over on YouTube, please hit the like button. We can do more of this education for you. All right, and let's see. What else did I want to go over? Yeah, look at the selling starting to come in now. Yeah, maybe this volume up here is trapped, and we will see the move back down into 45 here. It's kind of looking like it, but again, do we have all the pieces? No, we don't. There's on the offer here, but on the bid here, and we're kind of in this big jumbled range in here. So no, we're not looking for it, right? And we just avoided something here that would have been going against us. All right, now if the order flow is different in here and we had that on our side and that foundation behind us, we would look for it, and we'd look for the move. Right, and we just didn't. This was something I was going over with Rob yesterday about understanding all of this in behind us here, that we have as our foundational trade to build upon, and then I look for this move to unfold. All right, so all right, I wanted to go over a higher time frame trade from yesterday, or it's not a trade, it's just an example. I just took a screenshot of yesterday. This is all of the price action that I had basically up until the close here. Close actually here. But this is what it looked like in Bookmap and the ES. And we saw this, we were not looking for much yesterday. It was, a very choppy. If you guys remember the webinar, we were not expecting much. It was quite a choppy day to begin with, and then yeah, we were looking for, I think, the move up into this area here, and we got it. And then let's see, this was, so the webinar ended somewhere around in here. So yeah, we were kind of looking for that move back up here. The webinar was from here 10 o'clock until about 11:30 or so. Yeah, somewhere around in here. And now here's what unfolded as the day continued on. Well, we see quite a bit of buying up in here. Now it trades into high liquidity. Okay, so, and then quite a bit of selling. So back and forth in here, still choppy. In fact, kind of surprised, selling down here, but that's it. That's as far as they took it, and that's heavy selling. They were not able to take it even to the middle of this range in here or down to the bottom of the range, right? So now we're chopping around back and forth again. This area looks horrible to me. There's not much buying, there's not much selling. Okay, just before 2 o'clock. Now, after 2 o'clock, look at the buying coming in. So, and it breaks the swing here. So I don't know if you guys like saw this, the same ideas and same concepts. This is starting to tell us something. And we trade through this high liquidity here. Let me zoom in a little bit more. So we can see this a little bit better. Okay. All right, so nice clusters of buying, okay? Nice cluster of buying, but a lot of selling. However, followed by a nice cluster of buying again, and look where it's taking place. It's taking place up above where that selling came in here. Okay, so this is starting to look a lot better, right? This horrible little area in here that we saw earlier is now starting to be defined by this buying in here. There's even more here. I'd be looking for it to go. Okay, this would be the flag pattern I would be looking for. All right. It didn't do it. In fact, we see a double top in here, and there's no buying up in here. There should be. There wasn't. We get another pullback, but we come back, retest in here. And guys, when you see that, when you know after this in here, it's looking pretty good. Right? We've seen this trade a million times. We're looking for this to go like that, and it didn't. We got a retest back up here. We got another rotation, but they really mounted the attack here. I'm wondering if anyone got that, saw that move. This is around 3 o'clock East Coast time yesterday. Yeah, 3 o'clock East Coast time, and this is a really strong move. Okay, this is that momentum move. You can trade it up to what we were looking at, our 40 level yesterday. That was, I think, the high, right? And then and we got the continuation move after that. Beautiful kind of continuation move, like our strong move, our kind of back and forth or pull back, followed by, again, strong volume in here. And you can just continue to ride it. Okay, nice high time frame move in here that could have been captured in here or even in here someplace. Kind of surprised, like it didn't move from here at that point. This is looking pretty good, but we just still got some more back and forth, and then finally we got some 3 o'clock. We got the move. Yeah, McLoco, the market pulse tool, excellent. Yeah, this tool has been great. We've been going over how to use that also for momentum. And one of the beautiful things about that market pulse tool is the it's boy, I mean, the back testing is what I really like about it. So we'll go over it in just a second. Now, one of the things, though, is that it works much better on certain markets, it's going to work better. Right, so we'll look at it on the S&P here, and we'll go through a few ideas as well. Okay, but something a little more volatile, like crude oil, gold, NASDAQ, Russell, those will work pretty well. S&P, it'll work for sure. In fact, let's go over it. It's just not going to work as well, right? Those volatile moves, those spikes, can work out really, really nicely. Yeah, McLoco. So this is what you saw. Let's take a quick look. In fact, okay. So this is what McLoco had. He saw his price divergence. Okay, and then absorption up in here, and then we had the data release. Okay, so data release, and then here's the market pulse spike down below the 75 level down here. It's a little tricky with this market pulse tool with data releases as well. This one seemed to work out pretty well, but because it's based off of 5 minutes of concurrent data, that's where this kind of blows out the reading in market pulse a lot of times. So anyway, yeah, nice move down into here, and look for matching some of these extreme readings up with your liquidity. Like suppose you had high liquidity down in here, and you're in this move and you're looking for the move and to test into that high liquidity, and then you get your market pulse move into that high liquidity. That's a great area to consider maybe managing your trade at that point. Okay. All right, let's turn it on. Let's take a look at it. Oh, one other thing, guys, with the break-even tool, you should be using this. You can also put in your commissions. It's free with Global Plus. So I think it's free with Global Plus. Let me take a quick look here on that. I'm not sure exactly what you get here. Okay. All right, so this is Global Plus here, and then Global. You get price levels. You get all these extra add-ons with Global Plus and the ability to trade in live market. You also get the Dome Pro, Execution Pro. Yeah. So you got. I think it's included then with everything with Global as well. I don't see it listed here. Yeah, I'll have to double check on that. Anyway, Global Plus for sure, you'll get it free. All right, guys, you can trade, I believe, with that the global version in Sim, okay? And you should. Yeah. All right. Anyway, therefore you can practice your management in here, just like this over here, and get really good at it. There's two things to get really good at here. One is to know your setup and lean on the foundation here. Okay, and you should know your setup extremely well. You have to know that you have an edge. Okay, that comes through back testing and building your trading plan. The next element that's just about equally as important is your trade management, okay, and your risk management. And this is where you can really take that trading plan to a different level, okay, especially once you start scaling. And that's a whole nother thing, right? But anyway, it's that important, right? In fact, you don't even, in some cases, it's a crapshoot. Like since there's a lot of randomness in the market, if you just are really good at your trade management, I bet you could probably eke out a profit, or maybe even make a really nice profit just by trading ranges, right? So you wouldn't even care about this volume. You'd just say, like, I'm at the bottom of the range, I'm gonna, go long. You're gonna get run over a lot of times, but when you do get your profits, it'll probably make up for those losses, okay, with really good trade management. All right, so let's see. We covered our higher time frame. Looks like a few of you guys got it, which is great. And yeah, CVD, market pulse together. Okay, let's take a look. Yeah, Crash, I'm totally with you on that. You would not take it around the news. It's I mean, I guess it depends. Like you kind of wait for that. I'm not advocating trading the news, but I mean, it's possible. I mean, these are these strong moves, and it was, there's all sorts of reasons. This is a whole nother trading plan that you guys can put together, and it's a really good one. Is you're up already pretty high here. It's pretty lofty. It's already closed the gap for the day. And we're trading up into high liquidity in here. We have news. And what is the worst case scenario in here? And think about it here. If there's really good news, how high is this going to go? We're already up pretty high. Okay, so you can kind of minimize your risk by already being in this trade to the short side. All right, now I'm not advocating this. Again, this is not a trade recommendation. However, there's a logic to this, and for your fundamental trading, this can work out really, really well. You can get in like a half position or something, and then already be up beautifully. Okay, because the market is already up. Okay, so whatever the news is, if it's really good news, maybe it only goes up a little bit, and then maybe you can even add more to it, and then look for a pullback and then get out. Now, again, there's risk in all of this, but let's say the news is not good. Well, now you're positioned pretty nicely, and you would be getting in someplace around here, or maybe you put your limit orders up in here, and they were left. You didn't get filled, and then at that point, you could consider your market pulse tool. Okay, got volume pressure in here. Let's push play. Volume pressure imbalance. Yeah. And let's get rid of stops and icebergs for the moment here. You guys on YouTube will hear this already. So yeah, anyway, looking at your extreme readings in here, well, there's one here already, okay, on the first move, and then you got all this consolidation in here, and then we got our second move. God, this looks quite pretty in here. Yeah, almost kind of picture perfect. Look at all that selling down at the lows in here, and not much buying, and this making lower highs in here. Sellers are going to take it, and they do. And then note how we come right back though and retest those areas. So you might have gotten in a good position. These areas will be retested a lot of times. Anyway, you could have taken some off down at some of these extreme readings in market pulse, but look again at your foundation to the left. Okay, this is a great area to consider some profit taking. This one's pretty good too. Okay, you might just get the bounce off of here, or you might get the bounce off of there. Now, again, we can take a look at these areas here, and you can see reactions, even with the news here. Okay, let's zoom in here and just it proves the point. Okay, so, well, this is the first swing. That's why it's bouncing here. Here's the second one. That's why it's also kind of bouncing in here. Okay, here's the third one where it bounced really nicely. Right, so, and you had market pulse tool all the way down on all three of those. Okay, so this is where you can, I know Crash uses it a little differently on pullbacks and extreme readings, but you can also consider your exits on your extreme readings in here. In fact, with momentum moves, guys, this is a way better tactic. Okay, and in fact, with momentum moves, you're looking for your pullback to an average. Maybe the average is back to we'll find a trend in here, and start to understand like the average kind of pullback in here. And today's a great choppy day, actually, or this price action surely is. But yeah, here maybe here's your a downtrend in here, and you're just going to get the extreme readings on the downside. Okay, but how do you use this tool to get in? Right? Are you always going to be buying these extremes in a trend and always counter trend trading? No, I mean, that'd be horrible. Like it's nail biting. It can go against you. Instead, look for the moves back to kind of there's like an average in here, and I'm trying to advocate, or at least trying to get. Sorry, guys. Let me try this again. A meeting together to cover a moving average in here, right? So because look at where you get the spikes in here. Okay, right here, right here, right here, and right here. Okay, let's even take those up. Okay, this market pulse tool is really nice. It really captures these areas here very nicely. Okay, and look how we already have in here. This is another thing that I really like. Here's 4 examples in a back test right in front of us. Okay, we also have the a place to take profit. Okay, that would be here, in here. Well, I should use in different color. Let's try that again. On. Okay. All right. So guys, and this is golden, is to be able to back test this so easily. Okay, so let's suppose you got in, or you got out here, got out here. God, I mean, this is like being a market maker. No kidding. Okay, now that one's not so good. But this one sure is. Okay, and this one's great as well. And there you go. So you're selling, you're buying. You would have missed this one here, but you would have, yeah, maybe you bought here, or maybe it went down further and you bought, but you're selling again. Okay, maybe you're getting out here. No extreme reading. Okay, but we do get an extreme on the buy side. Okay, and then you'd be selling, you'd be buying, be selling, and then if that was the case, you would have missed this one altogether. Or maybe you would have, but maybe you would have looked at this little pullback in here, and that's enough. Okay, if that is the case, then you are selling, and then you are buying here. Okay, so there's 1, 2, 3, 4, 5 different setups in there. Okay, and trading it back and forth in a trend. Okay, and you're only getting extreme readings here on the downside. All right, so hope that makes sense to you guys. It's a different way, the way Crash uses it, a little different. He's he's looking for bigger, kind of bigger picture pullback, and then it's in an uptrend, but then he's looking for that extreme reading and then getting in. Okay, so it's in an uptrend, but it's a deep a pullback with that market pulse hitting. Guys, we're not missing anything in here today. It's been really choppy, but we've been going over a lot of good stuff. I hope you find it helpful. Oh, great crash. Yeah. So you're using the tick sound, volume pressure and balance, and volume pressure to help those extreme readings. Yep. There's something I just have to I kind of mentioned this during the Bookmap Academy meeting. I'm not a big fan of indicator-based trading at all. So I've just become convinced that it's really everything is about the order flow. It doesn't matter what time frame. Okay, so I'd be just be careful with your indicators. But again, how can you, if you go and back test this, I mean, that's all you need to do. and then control your risk. You're just looking for two things: an edge and controlling your risk. Okay, if you can create an edge with your indicators, go for it. All right, it doesn't matter. All right, here, beautiful. Look at these little tops in here, market pulse, even on the ES in here. Okay, it's working great. Now, again, now understand something in here. We went through a trend and what to look for in market pulse, or consider looking for in market pulse. Right now, we're looking in. This is more of a sideways market, and what are we looking for here? Now we are looking for extremes on both ends. All right. So guys, again, you need to know your indicators and what they're telling you. So understand what they're made of. What is the math behind the indicator, and how does it display the data on your price chart? You have to know that. Otherwise, like, it's just so you're just flying blind. Sorry, crash. I'm going to use that analogy. Don't cringe. And it's just not a good idea. You got to know your indicators. You got to know what they're made of, and know the environment in the price action. Okay, there's a big distinction between price action and the indicator. Huge. And we've covered that a lot over the years. It's mostly CVD that we've covered because that's the one we had in the subchart for the longest time. But a lot of traders, oh, look, it's divergent. I should get in, and it's like, well, no. The price action and the order flow and the transactions is telling you something completely different. You're just going to get run over, right? So yeah, be very careful here. So yeah, here's divergence up here. No question about it, right? Like, look. There's more selling in here than there is buying in these little peaks. Okay, here's your divergence right here to here. All right, pretty nice on the price chart. Pretty good divergence in here. Now, the thing is, though, is what about this buying in here? All right, I don't really like it. So actually, I kind of like the sell side here, and I do like the divergence in this case. So I would look for sellers to hit down to this liquidity here, or maybe even down to lower levels here, and maybe down to 44 here, or 44 and 3/4, 42, 40, 41, something like that. Okay, this divergence, and I understand what it is. It's just buy minus sell plotted on the chart here without any indication on the price chart of what's happening. And therefore, I have something that makes sense to me, that I would be looking for this to go down now with this divergence. All right. Loco, like think of it this way, like what we're just covering right now. This will make a big distinction. Okay, and you will likely be on the right side here. You're more likely to be on the right side. Right, and this is something you'll have to study, but like this is choppy. And do we see any distinction in here to lean on these buyers to totally take it higher at this point? No, we don't have it. Therefore, we're looking for our sellers to take it back down here, and we do have a divergence. Okay, so what this means, and this is also like slowdown, the way that I believe, I don't know if slowdown's looking too much at CVD and divergence, but like he's looking at stop hunts above these ranges in here, which is another one which is great to use, and you would have gotten it here with this kind of brighter red line would be your stops. Okay, so there you go. So you've got stop run, you've got divergence in here. This is looking great, or looking better for a move back down to the bottom of the range, and just the bottom of the range. Now maybe we'll get follow through, maybe we'll get continuation, okay? But you would reduce some risk down here, okay, right around here, because this is where those buyers came in and moved it. So this is where you want to reduce some risk. So we were looking at this earlier. It was, you know, maybe around this kind of 47 level down to about 45 and a quarter, right? So you got maybe a couple of points out of it, and then you'd still be in it though. You'd reduce that risk, right? I would put my stop at break even on this one as well. All right, and it'd probably be stopped out at break even right now. Okay, or as we covered yesterday, another thing on these kinds of choppy days in here, consider all in and all out. You're not looking for a continuation move. It's choppy. So adjust your risk management to all in and all out at that point. All right, and you'll see these days. Maybe that even turns into a better strategy for you. I would recommend it to those who are newer to trading. All in, all out, and build confidence. And then on those trending days, you can look for something more, okay, and try to scale out. Okay? It gets very tricky when you start scaling as a newer trader. It can really mess with your mind, and you'll have one loss that takes a long time to win back if you're scaling. It can. All right, guys. Let me see if there's any more questions, and see. Oh, okay, Alan. Yeah, I'm sorry. I did see your request for looking at our NQ. Yeah, let's take a quick look. All right, now let's take a look at this divergence play again now, though, right? I'm seeing buyers starting to come in here. Now, we had buyers up here previously, and they're still buying interest. So yeah, now I'm actually the opposite here. The divergence play is here. Okay, there's actually a bit more selling here because CVD went down down into this area here, and look at the previous swing over here. Okay, so even though we see these buyers in here, there's more selling down here. If we can get them trapped and we see buyers up in here, and we get an order book on our side in here, and the reaction to it is buyers, and they're already pulling up here, right? We got another setup here. Okay, so you'd be looking for this move up into 50, 51, and then maybe it's all out at that point. Okay, or maybe you'd hold for, back up to the swings up in here. Okay, it's pretty choppy, and there's a lot of stuff going on in here. I would be getting out up here around this 50 level, and yeah, maybe try to hold for 51. Again, this is not a trade recommendation, and it really doesn't look all that good here. This order book in here is not helping us too much. They're there underneath here, and that's a good sign. And we had some buyers in here, and now we're starting to see some selling coming in. Not too many buyers here. Yeah. All right. So then stopped out at break even on this one. That's it. Look for the next. You know, this idea, we were looking for it, and it should have. We want it to work immediately, and it didn't. All right. But we took a shot at it, and this didn't follow through. Okay, we had our reasons, and then we managed it correctly. Okay, again, it's short term. However, this range could be on a monthly chart. It's the same idea. All right, let's jump over to this NASDAQ and take a quick look. Crash, we got to get you trading off of the chart. Slowdown asked last Friday about trading off of the Trader Map Pro chart. I asked development. Yep, we will offer it. It's going to be somewhere in mid-March, though. We've got some other things that are more pressing on the roadmap at the moment. Okay, so looking really forward to that, because look at the liquidity in here on some of these charts. Or these time frames in the NASDAQ, it's not too helpful. Okay, so let me I'll just quickly demo that Trader Map Pro. We'll look at a different chart here. Okay, we're making a synthetic instrument, basically, this Trader Map Pro. All right, I've already got it set up. I'll just recreate it here so that you guys can follow along. All right, so Trader Map Pro, it comes with the MBO bundle. This will work on Global or Global Plus. That does not matter. You need to have the MBO bundle, though. Right? Now, this Market Pulse as well is a part of the MBO bundle. It's actually incorrect on the marketplace. I just found that out. So let me just show you, if you guys are interested in this. Okay, let me just show you where you can find it and what this is all about. So go to the marketplace here, go to the MBO bundle from the More button. Okay, that'll take you here. And then here's our MBO bundle. This will show you stops and icebergs. It has Liquidity Tracker Pro. Here, it's all here. There's actually 2 stops and icebergs on chart and subchart, Liquidity Tracker Pro, and this one here is the Trader Map Pro, and that's what we're going to demo now. Now, if you look down here, you see volume, Market Pulse volume pressure. This is incorrect, and we need to change this. It will include all of Market Pulse tools. All right, so if you are interested in this MBO bundle, you're getting quite a bit of value out of it due to these new additions here, Trader Map Pro and Market Pulse. All of the Market Pulse add-ons are in here. Beware the Ides of March. Thank you. The best laugh I've had this morning. Let's see. Yeah, let me just show you here the Market Pulse tool. Okay. Where is it? Back to Marketplace. So there's a Market Pulse bundle as well. And here it is. Okay, so the Market Pulse bundle, now this is for the yearly subscription. Get it for monthly. It includes all of these algos in here. Okay, for crypto, it's for all markets. Stocks and futures, this is what you get here. For crypto, you get the liquidity pressure as well. Right, and there's some web, Market Pulse web as well that you get with crypto. Anyway, these are all the algos in here, and there's actually two for volume pressure. You can see here, price change, spread change, order book. There's two for order book pressure, absorption and sweeps. There's two each. You get all of that in here, and the price is let's see, yearly futures and stocks 346. Crypto is 173. But you can just get the MBO bundle here instead, and just get the MBO bundle for $134 a month, and you'll get the all of. Now this is also, you have to be a futures trader using CME data and rhythmic data for that CME, those CME instruments. Right. Sorry guys, I just want to go through where you can find it and what you get for these things. Let's add our instrument in here. So click on create. We select NASDAQ here. We add, click on the add button. We'll go to our filters. We're going to go to order change filter. And then you can see once you click on that, we have the show only the orders that were changed or unchanged, not changed. We're going to select not changed. Here's why. See the liquidity that's kind of following at a distance here, both on the bid and the offer here. Okay, well, it's changing. The liquidity is changing. Therefore, we want to filter out the liquidity, that liquidity. We want to show those that were not changed. Okay, we can use price or size, or price or size together. Right, so let's just use price and size together here, and we'll click play. Okay, now this will open up a new instrument here. This is the NASDAQ with rhythmic data. This is the NASDAQ here with order flow change filter for Trader Map Pro. Let's click on that. And here we go. Yeah, so Crash, I can't wait for you to trade off of this here. It's going to be so much better for you. See how that filter or that halo kind of around price action is gone. Right? You can do the same in the S&P or anything that for market buy order data. Okay, for the Trader Map Pro. Okay, so we just traded up here into high liquidity. All right, so now there's still a bid here. Now let's see if we get a little bit more up here. All right, I'm looking for it to come back up into 640. Let's see if we can get a little bit more. They're on the bid, and we had a reaction. No, now we found some sellers. Okay, so never mind on that. That would be we got to find buyers here. Okay, now they haven't traded through it. They absorbed it here. All right, I'm looking for it. Let's see if we can get our buyers now, and we're looking for the breakout up into 40. Okay, just 40. Take some off. Okay, front run it. Take some off. Right. So there's a it's only like about a 5-point move, but again, understanding these concepts, a little bit of a flag here. Which might actually become another flag right now. Actually looking for it. Yeah, looking for it to unfold. Looks pretty good. 42, maybe 46 here. Okay, volume looks good. Looking for a continuation here. Here's the this. Yeah, let me cover this. This was the flag pattern initially, but it was kind of within this range in here. So kind of strong move, not the strongest. We had liquidity though here, and the reaction to that liquidity was it was taken. Originally, it repelled them. The sellers came in and traded it though, and then we found some buyers back up above it. We didn't go through that liquidity, right? So we see our buyers come back in. We're looking for the move back up to 40, and then that completes the the move here. However, and let me cover this quickly here. It's moving so quick. It's this move here, and then this is our pullback move, right? And we can even double that, and we can look for another flag out of that, right? And we have a much better move here actually for that flag pattern. There's a couple of caveats though in here. Okay, so it's not the greatest flag pattern, but here's the measured move up into high liquidity. Beautiful. All right, that's good. Then our pullback move, okay, looks pretty good too. Now the thing with the pullback move that kind of negates a really a quality setup in here is this is a deep pullback, and there's not a whole lot of liquidity here on the bid. Okay, the buyers come in up in here, and we do get our continuation, right? But it's really these buyers in here that it's starting to look pretty good that it might unfold. So we don't have all the pieces, but this is the second flag pattern, right? And then you can also take this measured move here, and then move it on up to here, and that combines very nicely with the high liquidity up here at 42, right? And that's where you take your profit. The move is completed at that point. All right. So nice, quick little setup in there. Good timing on that one, Alan, to jump in and cover that, and also to cover the Trader Map Pro in here. That Trader Map Pro was kind of key in essence, because this longer term high liquidity in here is not filtered out now, okay? Nor is it here as well, which is the first move, right? So kind of two flag patterns there, one within the other. Okay, caveats again on this in here, guys. If you want more information on it, you know where to go. It's at the Learning Center, right? So go to that Learning Center from here. Let me show you again. From bookmap.com, click on Education, then Strategies and Setups, and then you can go through these videos in here. Okay, we did it on purpose this way so that first you understand continuation patterns in general. Very short video. Then we went over the flag pattern in diagram and also management, and then we go over it and what it looks like in Bookmap, and then we go over it with the different criteria that you're looking for within that setup, right? So you've got the full thing here, right? And broke it down. All right, let's go back to that S&P, and what do we see? Yeah, so we finally did see, like, it was really back and forth in here, but we did kind of read that correctly. Like first we kind of read like, well, buyers buying up in here, but our cumulative volume delta, and we're looking for the move back down to about here. We got it. And then we come back up again, and we're like, well, hold on a minute. Now we're actually looking for the move higher here, because we are back here. We have the divergence in here, no question. There's more sellers, but now we're looking for the stop run up in here in these areas here, because there's more sellers in here, and yet the auction is happening up here on the buy side. Okay, so again, understand what your indicator is showing you. If it's market pulse, if it's cumulative volume delta, if it's Trader Map Pro, but put those pieces together with the price action and the order flow. All right. Hope it helps, guys. Let's wrap it up. We'll call it a day. Tom B is next. You might want to jump over and go through the. Hold on a minute here. Go through that with volume profile trading with Tom B. We've got a full schedule, guys. Again, you can see that full schedule here on the marketplace Learning Center. If you just scroll down a bit or go to join free events, you see our calendar. We've got a booked calendar here, multiple languages, multiple markets, and today's Tuesday, so we've got This is the all markets. We've got Tom B next. We got Crypto Lifer after that. We've got Patrick trading Brazilian markets. Doug is right in between the crypto in Crypto Lifer, and then also Patrick. Doug with options here. And then we have the Algo Boys from 2:30 on into the close, right? So if you guys are options traders, highly recommend you go to Doug's webinar and attend. He's got a really fantastic strategy and looking at indexes and all sorts of Greeks in the options and applying it to several different stocks. All right. So that gives you kind of a lowdown as well, what's happening out there. Guys, we'll wrap it up. Thanks for coming, everybody. And we will see you on Friday. I'll be off the next few days. We have Jay Trader tomorrow at 10, and then Scott Pulcini on Thursdays at 10. All right, thanks for coming. Hit the like button, please. We'll see you on Friday.